All right, what's going on, guys? Here with a quick trade breakdown as to why I decided to do this trade this morning on our live Zoom session, which turned out to be a winner. We're gonna get into a London high, which is the original consolidation that I was looking to target. All right. So I'm gonna break down step by step, how why I took this trade, why I was bullish on the day and exactly why I was targeting this high. All right. So if we go to the daily time frame, right, overall we are trading out this daily fair value gap, taking out the sell side liquidity, right? And my overall drawn liquidity is this Wednesday high, which is also this daily fair value gap, which I'm targeting, right? Because obviously we trade to about this lower half of this daily fair value gap, right? It's also a weekly fair value gap, right? Overall targeting this daily fair value gap, right? So you always want to start in a higher time frame and look as to what, excuse me, look to as to what institutional order flow is telling you, right? So obviously we made a low here, all right? We took out previous weekly low, which was Thursday's low, took out previous weekly low on Monday, right? To and slowly starting to revert possibly to previous weekly high if we trade to this daily fair value gap, but I don't plan on that happening. All right, so trade into the daily fair value gap as a draw for the week. All right. So obviously you see, prices making higher highs and higher lows, right? And we can see our prices retracing back into this daily fair value gap, right? So in my eyes, price is bullish. Institutional order flow is bullish right now. The drawn liquidity being this Wednesday high, which is also that daily fair value gap. All right, so the point of interest, right, for a hard time protocol was this 4 hour fair value gap. Right. So, ICT always says you want to go on a 4 hour and draw any type of, fair value gaps, that show you speed. Right. We can see today, obviously we had a bunch of inefficiencies. So when that's the case, go to the 4 hour time frame. You can see this gap a lot more clear. So we had this 4 hour fair value gap that used as a point of interest and just waited for price to get there to then start forming a possible trade idea. All right. So once we have that, we can drop down to a lower time frame to go to a lower time frame protocol. All right. So obviously, first target was this London high as the original consolidation. All right. And obviously, we're just looking to target that just for the day. All right. So go down to lower time frame. We want to frame our idea. Right. So once we get to our point of interest, we are now looking for signs of reversal. Right. So three things. So we have SMT. We had Asia SMT with ES at the low. All right. So next thing we want is a change of state in delivery. All right. So we have this inversion gap here. Right. You had this inversion gap. And the key to having a valid change of state in delivery is you want to see it happen on both ES and NQ. Right. So for example, here, right, we had the same inefficiency. You see how my pointer right here is on this gap. It's the same gap. If you look on the right, yes, it's the same gap. We want to see both markets invert this. And sometimes it's hard to see with the eye. So that's why I know you guys see me use the fair value gap thing here to kind of help me, be able to see it. So let me go back a little bit. All right. To help me be able to see it sometimes if I can't see it. I'll continue. What the heck is going on? What the heck? I don't know what just happened. Jeez. Okay. So we're gonna have to, okay, let's just go back. There's some malfunctions here. Okay, cool, perfect. All right, so here we are. So let's go back here. Boom. All right, cool. All right, so we have an inversion gap on both markets here. Right, so this indicator kind of just helps me see it, right? Because sometimes you're not might be able to see it so clearly, right? So boom, once it turns blue, that's an inversion gap. All right. So therefore, once price trades back into it, that is a signal to get into the trade, right? So now we have that the last step is we want it to happen during a time of interest, right? So we have the SMR form during a time of interest, right? And the thing is, once we trade into that point of interest and then 10 o'clock opens, it shouldn't take out that previous cycle low, right? Once we already manipulated, 10 o'clock should just be distribution. All right. So boom, we had change state delivery on both. So our entry was just simple fair value inversion gap here. All right, so boom, change to one. One is our entry stop loss. We can have below the body candle. The safe stop is below the S&T low, right? But it shouldn't trade through that. All right, so boom, we can have out the body right there. Whatever. All right. And then take profit is right at the original consolidation, which is that high. That's the target. All right. So we again, you could take off if you're targeting here, you can just go for a full pull, or you can take off a contract at this previous cycle high, to pay yourself for your time, which you should, especially if that's your draw on liquidity. Okay, boom, this original consolidation of this move here. So you want to take off more than half of your profit at that previous cycle, because this is a previous cycle high, because the new 90-minute cycle has started at 10 o'clock, right? Because you understand, let's get this out of the way real quick. In the morning, there's three 90-minute cycles that we pay attention to. So the first one being that accumulation phase, right? When we're talking about AMD, right? From 7 o'clock to 8:30, that's the accumulation phase, right? Price typically consolidates, right? From 8:30 to 10, that's manipulation, where price manipulates or manipulates to reverses, right? And then from 10 o'clock to 11:30, that is the distribution phase where price typically distributes or just continues to where it was already heading to. Or sometimes it could be the manipulation to, what I'm saying? It just depends on the profile, but obviously we already manipulated. So then we expect 10 o'clock to 11:30 to distribute. All right, so boom, you enter there. All right, stop there. All right, and so we just wait. All right, so boom, first target hit. That's when you move. All right, once you take out that high, stop should be at break even here. All right, price shouldn't return back to that. All right, and then boom, came close to break even, but didn't get there. All right, and about 1 o'clock, that's when we had price take out that London high. All right, so pretty straightforward there. All right, so I'm gonna go through the three steps again to make sure you guys have it. All right, so we'll just open up one chart here. So first things first, you want to understand institutional order flow. Is the order flow looking bullish and bearish? Based on market structure, right, and what price looks like it's drawn towards. right? So you see higher highs, higher lows, respecting bullish gaps, disrespecting bearish gaps, right? Order flow is bullish, right? Draw liquidity was the price reaching for. We have this daily fair value gap, right? Long term as the price is drawn towards that, right? And then our point of interest, this is 4 hour fair value gap, right? So 3 steps for the higher time frame protocol, right? So step 2, lower time frame protocol, right? SMT, Asia, right? CSD, inversion gap on both markets, emphasizing on both markets or it will not work. All right. And then step 3 is it happening during our time of interest. So time meets price. See the S&T happen during the macro. Boom. So we can enter anytime during and after. All right. Perfect. So step 3, execution, inversion gap, stop loss below the S&T low, and then target, right? Original consolidation, which is the London high. All right. So that's everything there. So I appreciate you guys watching this video. And I will see you guys in the next lecture.